Here is a look at what the real estate experts are forecasting for the Riverside County real estate market for 2023. Hi, this is Tom Olsewski with Team Olsewski and Coldwell Banker. I take the time to listen to the experts and provide you an accurate take on our local real estate market. Depending upon what news you watch, you will hear all kinds of assumptions on what's going on. So this information is to cut through all the BS and show you exactly the most accurate information. This is what I believe to be the most accurate information on our local real estate market. Just like when you work with me, I will tell you what you need to hear and not what you want to hear or somebody's interpretation of the information. So here's the forecast for 2023. Active inventory. The year will begin with less than 5,500 homes, the third lowest start to a year since online tracking began in 2012. Only the start to 2021 and 2022 were lower with 42% and 59% less respectively. Prior to COVID, the average start was 84-85 with 57% more available homes to purchase. The inventory crisis will continue. Expect the inventory to rise on the back of diminished demand, only to be hampered by the hunkering down effect where homeowners opt to stay in their homes due to their underlying low mortgage rates. More homes will enter the fray once mortgage rates drop below 5.5%, most likely sometime mid-2023. It could be sooner. Expect the active inventory to peak around August, eclipsing 8,000 homes, well below the 9,477 home peak average prior to COVID, which was more of a normal market. Demand. Due to the persistent high mortgage rate environment, buyer demand will continue to be muted with less competition and pressure on affordability. Buyers will be extremely cautious and unwilling to stretch above the asking price. They will be looking very carefully at price. So expect home values to drop between 6.5% to 8.5% for the year. There is a strong potential for mortgage rates to dip below 5.5% by the summer due to the combination of a slowing economy and falling inflation. With lower rates, demand will strengthen along with affordability. The combination of lower rates and lower home prices will prompt this rise in pending sales activity. So the housing cycle, how's the cycle going to be for this year? The housing market will follow a normal housing market. The strongest demand coupled with the highest levels of new sellers will occur during the spring market. This will be followed by slightly less demand and continued new supply of homes in the summer market. From there, demand will drop further along with fewer homes entering the fray in the autumn market. So if you're looking to buy, there's going to be more to choose from in the spring and summer. Finally, all of the distractions of the holiday market will be punctuated with the lowest demand of the year and few homeowners opting to sell. So look at closed sales, and this is the number of successful closed sales will decrease by 10.5 to 12% compared to 2022, with around 28,500, the lowest sales volume since 2007. Luxury market. Luxury housing will be sluggish and will continue to transition to normal, longer market times, often taking months to procure a sale. The spring market will be the strongest for luxury and will become a bit more sluggish and susceptible to Wall Street volatility during the second half of the year. Interest rates. Look for mortgage rates to start around 6.5% and slowly but methodically drop as the economy slows and inflation gradually eases. It's usually the real estate market that takes us out of an inflationary recession period. As the United States economy slips into a recession, expect rates to fall below 5.5% and may even fall below 5% by year's end. If mortgage rates recede to these levels, housing will stabilize and home values will stop their decline. Not really seeing too much of a decline overall. Distressed inventory, do not expect a wave of foreclosures. The number of active forbearances has dwindled to very low levels. Of the over 7.8 million forbearance exits, 91% are either performing monthly or paid off their loans. Only 1% are in active foreclosure, and that's less than 100,000, and that's across the United States. And the current delinquency rate is at its lowest level in decades. Expect slightly more distressed sales in 2023, as there will be some homeowners who will be susceptible to an economic downturn. Nonetheless, the total numbers will be very low and undetectable in the broader housing market. It's just been a handful or a dozen foreclosures in all of Riverside County. So the bottom line for 2023 is that the market will continue where housing in 2022 left off, extremely sluggish. Housing is particularly interest rate sensitive, where even with anemic low inventory levels, values will still drop due to severe affordability issues. Values will stop retreating only when mortgage rates drop below 5.5%, instigating more demand and more homeowners to stop hunkering down and list their homes at a more normal rate. The housing market is no longer insane. Homes are, for the most part, not selling above their asking price, not selling immediately, not selling with multiple offers. And there is far less activity and buyer competition out there currently on the market. So I hope you have a happy and healthy new year. Hopefully this information was helpful.